All right, folks, welcome back to the Property Couch podcast, and today we've got a ripper show for you. Great guest. His name is Chris Kohler. He is the Channel 9 business, finance, and property reporter, Ben, and he gets so many unique insights from his point of view. We get to unpack them today. What else do we cover?
Now, Bryce, you need to hang around to the end of the show because I need everyone's help in our community. We are seeing government policies in New South Wales and Victoria also creating a lot of lack of confidence. So please hang around. I'll share more about that at the end of the show.
Folks, what's making property news is not to be missed. Let's rip into the show.
Welcome to the Property Couch, where each week you get to listen to two of Australia's leading experts. Bryce Holdaway, co-host of Location Australia on Foxtel's Lifestyle Channel, co-host of Escape from the City on the ABC, and partner of Empower Wealth Advisory. Ben Kingsley, chair of Property Investors Council of Australia and the founder of Empower Wealth Advisory, named the 2018 and 2019 Property Advisory Firm of the Year. Stay tuned as they bring you the insider's guide to property, finance, and money management.
All right, folks, welcome back to the Property Couch podcast. And hello, mate. How are you today?
Good, mate. I'm well. How are you?
Very good. Exciting today. We've got a very special guest, but we've got a fair bit to cover too, Ben. But countdown to 500, Ben. 2 episodes to go.
Only two. It's not 2 sleeps, it's just 2 episodes. But yeah, it's very close, very close. Now, I can't wait. I cannot wait.
Can't wait. And for those folks who, it's just a number. It's a very, very enticing guest, so folks. And I guess we're going to...
World-renowned.
We're going to...
World-renowned guest.
World-renowned. And we're going to raise the bat too, Ben. 500. That's reasonable. When everyone's a podcaster these days, to get to 500 is probably the new achievement. But hey, you got a PICA webinar.
Yeah, just a quick update. Next Tuesday night, the 18th, we've got a webinar coming out of Western Australia, in fact. So it's a little bit of a later start, so hopefully you can put the kids to bed. We're talking about between 8 and 8:45 is the webinar, and it's an introduction to wealth creation through small developments. So a little bit of 101 in terms of small developments, land subdivisions, if I can get my words right. Yeah. And so, yes, it really is just focusing on that. So we've got a couple of experts who are operating over in the Western Australian market who are just going to share some of that knowledge around doing sort of small developments and subdivisions in a pretty tight market over there, and a tough market as well. So for those of you who are interested in turning apples into apple pie, that's you got to be a PICA member. So sign up and then obviously register to attend that, or you can watch it on demand later as a PICA member.
No doubt there's talent over in the West, Ben. You know, the West is best, so it kind of makes sense that you've scoured the country and you've ended up on that side of the country. So well done. No, check that out, folks. Definitely worth doing that. Hey, my Mindset Minute today, Ben, is a classic from one of the GOATs. His name is Jim Rohn. Just going to cut into a little montage that he's gone through, and we'll talk to it in a second.
I used to say, what if this happens? It's called the language of the poor. What if this happens? And on top of that, if this was to happen, look at the fix I'd be in. I better not try. I could always ace myself out. Then I'll tell you what changed my whole life when I finally discovered it's all risky. The minute you were born, it got risky. If you think trying is risky, wait till they hand you the bill for not trying. If you think investing is risky, wait till you get the tab for not investing. See, it's all risky. Getting married is risky. Having children is risky. Going into business is risky. Investing your money is risky. It's all risky. I'll tell you how risky life is. You're not going to get out alive. That's risky.
Ben, it's all risky. Isn't that amazing? Just a couple of little words. Jim Rohn can wax lyrical like no one else can. But just to remind us, we're not getting out of here alive, Ben. We're not getting out of here alive.
Obviously, that was the great line. But I mean, it was all, there's lots of rich information in there. But it's a really timely reminder, Bryce, and that's why we love sharing the gold from the goats in terms of you got to take risks. Again, I've sort of on record as saying I've never seen anyone save their way to a comfortable retirement. There's going to have to be some risk element attached to that. And so you got to spend it in a way to make it. So, that's time, effort, and obviously actual physical folded money. You got to spend it to make it. And so it's a nice little risk reminder that, it is risky, but so is everything else in life.
I love it when these come across my feed, Ben, and just the simplicity of the message is gets me. I'm like, got to share that one with our community. And
So good.
Hopefully that gets you through the week, folks. We've got a guest waiting to chat with us. Ben is a very special guest. You and I recently had a conversation with Chris Kohler. Let's cut to that conversation right now. All right, Ben, we've got a very special guest on the program today. We are chatting with Chris Kohler. He is a business, finance and property reporter with 9 News. Before this, he's been a journalist with Business Spectator, financial markets reporter with The Australian, national business editor at Domain, presenter on Your Money, business reporter on Sky News, and he covers the macroeconomic forces that shape Australia's markets. And in his role, it is to analyse and interpret the financials of the biggest investment most Australians will ever make, which is their home. Welcome to the Property Couch, Chris.
Thanks very much, Bryce. Ben, good to be with you. Yeah, look, certainly your book there. And I often do come to you guys asking questions about what on earth is going on in this market of ours.
Oh, we certainly love that, mate. But given your broad depth and, you've got this fascinating journey through the world of finance and journalism, covering a whole range of stuff, particularly the intricacies of the housing market. As someone who's seen that landscape from many angles, what is the most surprising insight or lesson you've learned about how Australians manage and perceive their biggest investment, which is their homes?
Yeah, look, Bryce, I think it's been just how resilient property owners are. I mean, there have been quite a few times over the last 10 or even 15 years where I thought things were going to go south, when I thought, interest rates have gone up too quickly as they have recently, or I thought that things were overvalued, or I thought that there was just going to be some economic shock that was going to cause some serious issues in the property market. Of course, there have been serious issues in the property market, but people are able to hang on. And it's something that's quite frankly surprised me. I mean, you look at mortgage arrears, given 13 interest rate rises that we've had in the last couple of years, and they're still quite low. Sentiment, that's weak, but people hang on. It's just the last line of defense is the family home. It's the thing that's, I guess, really been reinforced to me in this job quite a few times, that you can be going through some very difficult circumstances, and you'll do whatever you can to keep your fingers wrapped around those keys to your house. And I think it's a really interesting thing potentially about Australians in relation to the rest of the world, that we won't walk away from our homes easily. It's something that I find really interesting about Australians.
You're right, Chris. Part of that is the mechanism that is obviously the Australian property market, where we do take on debt, and obviously we have rules around that debt. So we don't have this concept that we have in the US, where effectively you can hand your keys back and there's no restrictions in terms of or obligations on you. So we do have that. But I think what you're pointing to is a really powerful heuristic, which is the loss aversion heuristic, that sort of comes up in behavioural economics. And Bryce and I talk about that from time to time, where it is this whole concept. We take loss as 2 times greater than gain. And so holding on to that family home and that loss aversion, we'll do everything to potentially hold on to that property, i.e. grab a second job, reduce our discretionary spending, because really the family home is the biggest wealth base that we have. So I think it's a really powerful reminder to people about just the lack of volatility we get in the property market, because the majority of people, 70% of people, own their homes, and that's ultimately part of this holding on strategy that we have in the market.
Have you guys been surprised at how low the mortgage arrears have been? I mean, I thought they'd be ticking a little bit higher, but the big banks are coming out in their statements and saying, look, they're still around that 1% or even lower. I mean, not only are we not selling up, we're staying on the right side of our mortgages, what do you guys make of that?
Yeah, I'm pretty happy to sort of say if the economy and the jobs story was different, then no doubt we would see that being a case. So if you combine the sort of levels of savings that we were able to accumulate during the pandemic periods, so that combined with effectively how strong the jobs market has been, that's the story of why we've got such a low level of mortgages that aren't necessarily underperforming. So if you take, if you slow the economy down a bit further, then ultimately that's going to change. And we'll see those arrears start to creep up over the course of the next 6 to 12 months if interest rates stay where they are, because it's still quite restrictive. And we've seen recently as last week, Chris, we saw the ABS come out and announce actually got a fair bit of their spending story wrong. And we've actually been spending higher than was originally first reported in the data. And so that's got to be playing on the RBA's mind around what to do there, because we do know that most households, when they do get money, they spend it. And it's that spending story that's still moving the economy along and keeping those jobs in play.
Yeah, it's interesting, isn't it? Because from July 1, we'll have a little bit extra juice flowing through in terms of tax cuts. And, it was interesting to I was in Canberra when the budget was being handed down, and we were all pretty firm in asking Jim Chalmers, what's this going to mean for inflation? And as a result, what's it going to mean for interest rates? And he was kind of, it was the issue. It was the question, because it was clearly a spending budget. But, definitely wanted to stay away from any implications for inflation. And every time we're in the room with Michelle Bullock, she's saying what you just said, Ben, which is that the jobs market is still strong. That's what's kind of keeping everything propped up at the moment. But, geez, those jobs figures, inflation figures, and now from July 1, what's changing in the budget, that's going to be pretty massive for everyone, I reckon.
I couldn't agree more. We will see interest rates holding for longer because it is a spending budget. And it might also result, worst case scenario, in higher interest rates. So, it's a difficult job. Let's put that out there, that, you're trying to get that balance right. And obviously Jim Chalmers has an election coming up next year in Labor. And so, they needed to talk to their base, and ultimately that is about continuing that spending. They've got to try and avoid a recession, because the perception out there is that they're not very good at running an economy. So they're obviously trying to change that perception. And so doing that is about trying to keep the general economy out of recession, even though we're in a per capita, recession that we all know about.
Hey, Chris, let's change gears. Let's go back to a conversation that you may or may not have been having when you were growing up with your parents over the dinner table. Can you tell us what sort of money discussions you might have had?
Yeah, well, look, I grew up watching the ABC News, as I suppose a lot of other people did. Difference for me was that my dad was doing the finance report on the ABC News at the time. So I was kind of lucky in that he had pre-recorded it, as I do with my finance spot. And so he'd be sitting next to me, as would my mum be. And then we'd get to turn to each other afterwards and say, so, can you, what does that mean? And for somebody who's 12, 13, 14, it's extremely lucky to be able to turn to the finance guy on the news and sort of get a little bit more of an explanation. Look, my mum is a journalist as well, so they met in newsrooms, and so it was very much a journalistic household in that sense. So we were always talking about stories. Everyone would read the paper and kind of and discuss those sorts of things, whether it was on the way to school in the morning or basically that sort of thing. We were always talking about it. As for the kinds of discussions around the table, it was mostly, it wasn't, hard data stuff. It was never about, how the markets work in terms of getting people rich. It was just that journalistic thing of, let's talk about ideas, let's talk about stories. I mean, whether it's me, mum, dad, I think most journalists light up most when they're talking about an interesting story. And most of the stories in finance are still about people, still about businesses, and still about kind of themes. And even if you're talking about the macroeconomic environment, you're usually talking about mass psychology, which is just inherently interesting. It's why all these people, millions of people, are doing similar things at similar times with their money. So you kind of find that you feel at least like you're getting a little bit of an insight into what's going on beneath the surface. So that was the kind of stuff we were talking about when I was a kid, is about, okay, what is an interest rate? Well, how do the kind of all the businesses have to be doing the same sorts of things at the same sorts of times? How does competition work to bring down price, or does it? What's happening on an international scale? It's not like we were having adult conversations. It was very much me getting explained to. But I tell you what, I appreciate that to this day. I think it really was very helpful, and I was very lucky to get it.
Well, that's what I was doing wrong, Ben. My kids won't watch my television show, so I probably should have turned it on while we're having dinner. But
you've got to pre-record it, mate, and sit down and watch it next to them.
I'm going to take some tips. Of course, your father being Alan Kohler. But can you tell us, because your father is very successful in finance and business, and clearly has a career with a profile like yourself. What were some of the foundational messages then, like around the basics of saving and investing? Sounds like was brought in very early for you. And can you remember your first investment? Was it a share? Was it a property? What were those cornerstone foundations that you were getting, that you implemented as you went to late teenage and then started to become independent?
Yeah, look, what I'd say is that I don't think the lessons were particularly more advanced or more intricate than a lot of the lessons that parents give their kids about saving. I think parents have got it pretty well sussed when they're talking to their kids about the importance of putting some money aside when they get it. Look, my dad and my parents were both pretty keen on me having a job from teenage years. So I was, stocking shelves at the local supermarket, flipping burgers. And then when I finished school, it changed into working at bottle shops and bars and hosting trivia nights, that sort of thing. But the message was always make sure you put some money aside. When you've got enough, try to do some investing. I mean, one of the turning points for me was when my grandmother died when I was about 18, and she left all of her grandkids $10,000, which was very much appreciated, I guess. But the conversation was about, okay, well, this is actually this is a sum of money. What are we going to do with this? And I talked to my parents about it. Decided to invest in some shares. Started a portfolio of kind of large cap Australian stocks. A couple of years later, took the dividends of that and a few extra savings and started investing in ETFs. And then from there, you kind of end up building the start of a portfolio, which never really has to go away if you're managing it right. It can be something that just sort of builds and grows. So yeah, shares is something that I probably had, I guess, a little bit more familiarity with from a young age, purely because I had been watching my dad every night talk about the market and what's up and what's down. One of the things I talk to people a lot is this idea that the share market is kind of this nebulous thing that I'll never get the hang of. It's happening above my head and it's not real. It's not understandable. Yeah, I mean, it's a damaging thing to think, I reckon, and I'm glad that I didn't necessarily have to have that, because I had somebody and I had some really interesting people to talk to about it. So yeah, they're kind of the lessons. But really, when it comes to the nuts and bolts of putting away some money, saving, they were the kinds of lessons. Cash is an interesting one. I kind of what I would say is that I'm a lover of cash. A lot of people think I don't like it because I do stories all the time on the rise of the cashless society, but I actually think that cash is such a beautiful way to save money. So when I was in my late 20s and early 30s, I set myself a challenge of trying to spend everything in cash, or as much as I possibly could. And every time I got some change, I'd put that away. And that's how I ended up buying my wife's engagement ring, was just in coins and $5 notes, pushing it across the table at this jeweler. So it's just this kind of these sorts of lessons. I think he was always very encouraging of just trying stuff. If it works, it works. If it doesn't, let's talk about why it didn't work.
Chris, I think, can we double click on that? Because that is a behavioural and using the sort of products in front of you. So we know, and in our sort of second book, Make Money Simple Again, was all about the digital world in which we were moving in, but trying to keep sort of maybe an analog way of running our cash. And that is that if we didn't have the money like our grandparents, we just couldn't spend it, right? It wasn't a plastic fantastic credit card that you could tap and go and not see all of that thing. So tell us a little bit more about how that made you, were making decisions out in life, where you're buying stuff or whatever. If you didn't have the cash, I'm assuming you just didn't buy it.
Absolutely. I think it's one of the big minefields for people coming through at the moment is how easy it is to take on various multiple forms of debt. And at a cost of living crunch, unfortunately, people are turning on it to survive. I think saving is something that is such a wonderful thing to do. If you can try to put money aside and build your way towards something, buy now, pay later is big. I mean, what if it's you save now, pay later? Instead, I just think that's such a great way to go. And I love the way you guys talk about that sort of stuff. I just think, and while we can, I mean, the landscape when it comes to cash is changing at a bit of a rate of knots at the moment. And I do have concerns about whether or not we're going to be able to continue to use cash day-to-day life without having to pay a fee. But certainly for right now, I think using cash is just a great way to go anytime you can. I mean, 94% of businesses still accept cash. 6% don't. That'll grow. It's now just 13% of transactions. I mean, anyone who's trying to save, that thing of just taking out your money at the start of the week, this is my money for the week. If I get to Thursday or Friday and my reserves are getting a little bit low, then it's going to be a quiet weekend for me. That's a good way to go, I reckon.
A great habit.
It sounds like the 7-day float right there and then, Ben. But hey, can you tell us a little bit about the journey then, Chris? Because your parents are journalists, and quite often doesn't necessarily mean the kids want to. And quite routinely, it's like, well, I don't want to do what my parents do, right? So how do we go from 12 years of age, last spoonful of peas, watching your dad at the finance column on, or the finance report on the ABC? What was the progression for you? What did it look like early days when you were at that, not where you are now, but when you're at that sort of really impressionable moment about what am I going to do with my life? How did you navigate that, and how did you get sort of nudged in the direction you are now?
Yeah, well, I finished school certainly not sure that I wanted to be a journalist, but thinking it was perhaps a viable option, because I was doing well in English and that sort of thing. My parents kind of said, I don't know, journalism's changing a lot. I don't know if I'd be rushing into it right now. And then kind of I went to uni to study journalism despite that. And then I was talking to my dad about finance journalism. He said, I don't know, finance journalism's changing quite a lot at the moment. I don't know if I'd be rushing into that. So I kind of two strikes there, I guess, at the moment, because I'm in it. But I went from undergrad in journalism to doing a master's degree in international relations. I really thought I wanted to work either in sort of foreign policy and international affairs, perhaps in politics. I was studying alongside a lot of people who were working in counter-terrorism, which I found fascinating, and I thought that perhaps that was something interesting. This is back when, the threat of terrorism was kind of everywhere. And then from there, I started looking more at how the kind of the international relations works on an economic and trade-related sort of avenue, and I found that truly fascinating. I was lucky enough to get a first job in journalism just covering financial markets, which again was very much sort of linked to what's happening internationally and in between trade routes. So I was kind of lucky in that the thing that I studied, without really knowing it, ended up helping me at uni. I thought at the time, I'm going into finance journalism, that all that international relations stuff's just going to sit on the shelf and never do anything. But it was a really interesting way to spark that kind of that start in how money flows internationally. And then, from there, Business Spectator, I went to The Australian, cover financial markets again. David Rogers is still the markets editor there at The Australian, and he took me under his wing and taught me a lot about how it works. And they had this great relationship with Dow Jones, Wall Street Journal. So you're in there with all these fantastic journalists. And then it was from there really that I started doing video stuff, 10, 12 years ago. And from there, the avenues into video and TV opened up. So it was kind of it was just a really one step in front of the other thing. I never really sat down at 15 or 16 and thought I want to be a financial journalist, just like other people in my family. It was kind of, it just opened up that way. It just developed. And along the way, I had the immense privilege of being able to have a mentor in my old man who I was able to talk to and ask questions. So that was kind of how it happened, I guess.
It's a logical waterfall effect that we see off the back of that, Chris. Like a lot of households and people going about their day-to-day lives really don't understand that the biggest commodity in the world is actually currency and money itself. Like it dwarfs oil and iron ore and all of those other components. And I think a lot of people lose sight of that in terms of that it is, money makes the world go around, and ultimately access to credit and all of those other components and government borrowings. So it's just a tapestry of information that then flows down into the living standards and lifestyles and everything that we create at the household level. And so I think it's a beautiful grounding. And when did you start to realise just how much it sort of plays into your day-to-day living in terms of, okay, the Australian dollar is valued at X compared to the US or the UK pound or whatever? When did it you could start to materialise it and in the narrative of the story to basically how households live?
I think it was probably been looking at companies. One of my biggest responsibilities in the early days of my career was covering financial results, whether it's half year, full year, you straight away, it's all about speed in online financial journalism. You've got to get the outlook, the profit, the dividend, and the revenue up really, really fast. And then you start building the story out in terms of what the CEOs are talking about. And those presentations, those investor presentations that come out every 6 months from these big organizations, they are fascinating. And anyone with a vague interest should definitely hop on to the ASX website and have a squiz, because some of the graphs, some of the conversations that these highfalutin CEOs are having, they're really interesting and they matter to us, whether you're looking at what's happening with Harvey Norman or JB Hi-Fi. It's reflected in how you feel about your wallet right now. If it's Qantas, it's about how you feel about your relationship with your next holiday. I think for me, looking at company profit results, company financials, was a kind of a really interesting way to look at, okay, here's how this macro actually kind of does filter down, and about really how, in the end, consumer sentiment is the lord of everything. And really, that's just kind of how people are feeling day to day. I mean, it's how you and your partner are feeling, your mates. I mean, you might as well be talking about it at the pub, because in one way or another, you already are. Whether it's talking about how expensive a pint of beer has gotten. I mean, that conversation in one way or another is filtering its way through to every single part of our economy. So, I kind of love those little avenues and being able to think about it. I mean, obviously, when those sorts of stories drop, you just, you've got to go straight into it here are the nuts and bolts of it as a story. But I think everyone's favorite thing is to talk about the ideas that flow from there.
Well, how that relates also back to, you talked about this, this share market, this eretesical, I think is the word, looking at the share market. And I'm like, it does look like this, sort of fake thing that's out there. But what backs that up is their actual businesses. These are businesses trying to operate and make a success of themselves, and they're judged in a live market in terms of their valuation. So coming back to, when you were making those investments and you looked at, so obviously, the big national businesses and our multinational businesses, and you're picking businesses, did you think about it that way early on? Did you think about, what's their forwards, what's their competitive advantage, what's their strategy to continue to grow themselves? Or was it, no, they're safe because, they've been around the last 50 years, so I expect them to be around for another 50 years?
There's a little bit of that, Ben. Like, there's a little bit of that whole, okay, Woolies has been around a long time. It's probably not going to fall over in the next, couple of years, or NAB or CBA or whatever. So there was a bit of that. Look, the lessons that I was given from either people who I was working with, or just basically older people who I knew who had been in the share market for a long time, is just that whole idea of, if you know the company, if you use the company, if you like the way it operates, that's usually a pretty good kicking off point. I mean, I was lucky in that, because when you're in finance newsrooms, or, if you have access to those sorts of data sets, you can look at things like, PE valuations, or historical share prices, or even analyst recommendations, if you're getting those notes coming through. So you can kind of fill in the gaps a little bit more. I mean, my own portfolio is by no means something to brag about, but it's it's just something that ticks over. The longer you do this, of course, you end up with those heartbreakers. Like, there's nothing worse than having to cover a story about a stock that you kind of ummed and ahed about buying, and then it just ended up shooting the lights out over the next year, whether it's Fortescue or Bitcoin, or CBA's hitting record highs at the moment. Those sorts of things. Everyone has those heartbreakers along the way.
We all do.
Hey, Chris. So there's clearly an equities sort of slant there from growing up and what you're exposed to. But then you start and do a television program with Shelley Craft for Domain around property. So can you tell us about that? And then what it was like, because that was a really successful program, and I think staggers everyone why it's not continuing. But it was a great show, but you get the opportunity to curate some of the best minds and the best ideas and the best stories to help shape your view around property. So, what is your view as property outside of your principal place of residence as a place for investing?
Well, I think Australia is a pretty good example that property has a lot of roles to play. I mean, purely in terms of the rental market, we've just seen how diabolical things can get if it's not a attractive place to put your money as an investor. So, look, I really enjoyed doing that show, and thank you for saying you liked it, because that's really nice to hear, because it's been gone a little while now, and I kind of do miss it. Look, Shelley and I were able to sit up there and kind of talk on a Saturday morning about the kind of the big picture, about some of the stories that come out of it, about the kind of, I was basically more talking about the numbers, about clearance rates, volumes, time on market, interest rates, stuff like that. But we found that, of course, auctions are incredibly compelling TV, because the first rule of any content is, if you want to make it interesting, raise the stakes. And I tell you what, the stakes are very high at auctions, particularly in places like Sydney and Melbourne.
Yes.
where people are putting their hands up for millions of dollars at a time. Look, I mean, the thing that I would say is that I'm kind of just a watcher of property markets, and I find them really interesting, and I love asking people questions like you guys. I love asking you guys your thoughts on how to interpret and analyze these markets. I'm not an expert myself. I'd probably be a very, very rich man if I was. But it's just one of those. It's one of those areas of intrigue, I guess, for all Australians. I mean, the number of people I know who treat domain and REA apps as if they're Instagram. I mean, you wouldn't get that over in other parts of the world. It's just this kind of national obsession, which is why a TV show about just property, and not a renovating show per se, but just property, why it actually might work here as opposed to elsewhere in the world. So, yeah,
gotcha. So one of the things I'd be intrigued to be a fly on the wall with you and your dad around a conversation is crypto, because the old school believe that it's worthless. Well, I'm making projections here, aren't I? But generalizations, whereas millennials tend to gravitate towards it as an opportunity. So where do you sit on that spectrum? And have you had any conversations with your dad or any other wise elders that you get opportunity to chat to about where crypto sits in the marketplace?
Yeah, look, I've spoken to my dad about that sort of stuff a few times. The thing that impresses me about him is that despite him being a finance journalist for 50 plus years, something totally new will come along and he'll just want to learn about it, and he'll spend a lot of time reading up on it and trying to get his head around it, because that was the thing that held me back and held a lot of other people back, is just the lack of understanding about what actually is happening here, what's on offer, what it is. Look, I've always kind of kept it sort of at arm's length in terms of personal investing. Obviously, there's been a lot of stories that I've covered about it. As far as my philosophy goes, I think it's really interesting, and I think it's clearly changed the investing landscape, and it's brought a lot of people in who weren't in before. I'd be really sad if I thought, and I sort of sometimes do think, that a lot of people's first go at investing was with crypto, and potentially they got their fingers burnt when things went down in sort of that 2018, 19, 20 period before rallying back up during COVID. And I'd hate to think that a lot of those people just cleared off and just decided that the whole basket's too scary for me in terms of investing. Crypto for me, it's very volatile. It's sort of day by day prospect, and it's of course a buy sell asset. There's no yield, there's no dividend, there's nothing like that. So it's kind of, I think, of limited value and potentially a smaller part of a portfolio. So yeah, look, I recognise that a lot of people have done very well, and I congratulate them for it. But it's look, for me, it's not the kind of investing that I get around, really.
What's little known about me, Chris, is I'm actually a crypto genius. I'm perfect at the timing, because my first foray into crypto was around that 21 period where it got to its absolute peak. And I got in, and I think I found the peak. I'm that proud of that achievement. And then within about 12 months, I think I'd dropped my pants 70%. So I don't know that there's a better story than that. Let's be honest.
It's a heartbreaker, Bryce. I feel for you, mate. I think there's a few of those stories out there.
Well, the only thing is, I'm a time heals all wounds. So I stayed in the game, and it's now above where I came in. So I got the privilege.
There you go.
I got the privilege of a white knuckle ride.
You're never out. Back. Yeah, you're never out. You're just long. I'm long crypto now.
Very long, and not a big amount of risk. Hey, let's bring it back to something that we do actually know something about. I want to come back to the property story. And Chris, you mentioned earlier that when you're looking at some advice you got around the share market and businesses, if you're using that business, if you like that business, if you think that business is offering value, it's not a bad idea to potentially invest in that business. I want you to put your owner-occupier hat on, because remember, the property market is 70% owner-occupiers, roughly around 30% investors. So when you are looking at a property for you, your wife and your son, what is it that you look for? Because this gives us a clue in terms of owner-occupier appeal and buyer demand. So I'm really, as someone who's played in the space, but then you actually have to go out and execute yourself and put your hand up at auction. What were some of the things that were important to you when you were looking for an owner-occupied property?
Well, it's such an interesting and well-timed question, Ben, because my wife and I and my family are actually in the hunt right now for a new home. We've sold our place, we're seeing out the settlement, and we're starting to bite our nails a bit because we haven't found anything new yet. We're going to, somewhere between 3 and 6 open for inspections every Saturday at the moment, and so you go in. You think about it all, you think about your checklist, and then you go away and you talk about it, and then all of a sudden you're self-analyzing about, why didn't I feel good in that house? Why did that bother me so much? And sometimes you think, if you're not in the market, you think you're going to have this easy run of, I've got this checklist. If it doesn't tick that, if it does tick that, then I'm going to feel a certain way about the place. And then all of a sudden you go in there and you realize how flawed we are at doing that sort of stuff. I mean,
it's our own money.
Mate, we've been looking at places lately, and we've been going in and thinking, look, this is really good, but it backs onto a train line, or the block's a weird shape, or there's ducts here, but the heating's not working. I mean, that shouldn't bother you as much as sometimes it does. But when you're thinking about the types of money that you're throwing into these sorts of places, you end up it's all feelings really, and it shouldn't necessarily be that way, but. Yeah, I mean, look, the thing that I always have found, and one of the things that my dad really told me is you can try to time lots of markets, like Bryce, you were talking about before with crypto, but bloody hell, property is really not one of those. I mean, when you're talking about owner-occupier, I have found that really your life really dictates what you're going to be doing. We've got a son who's 3. We bought the house right before we bought our current home right before he was born. He's now 3. He's sort of running up and down the hallways, and all of a sudden it's feeling kind of small, and you think, okay, well, I might need somewhere with a backyard, or it's those life moments that seem to dictate your property market. And really, if you time it well, that's kind of seems like a bit of a bonus. I'm curious to hear your thoughts on that, though.
I think it's important, firstly, that what sort of weighting do you give to location, Chris? Like, sort of, is there a sort of circled area that you're looking at, or will price move you, or would you look at something like townhouse with a small backyard or courtyard? I mean, obviously the Richmond property did have a sort of very small sort of courtyard out the back, but so I suppose that's the question. I'm really keen to sort of, what sort of funnel are you putting it through that's sort of giving you to a rough idea of what you would do, and how much of that is location, how much of that is land size, and then how much has that got to do with character of the home?
One of the biggest ones for me has actually been proximity to a medium to large size train station, because I get the train to and from work every day. And because my work means I can't work remotely, so I've got to be in here every day. The news is on at 6, so I'm usually not leaving work before 6. If it takes me too long in traffic or on the train, then I'm not going to see my kids before they go to bed. So all of a sudden, train is really important. Right now I'm in Richmond, as you said, it's a handful of stops and I'm in the city, and so I can be home really, really fast. And so that was one of the things that my wife Susanna and I sat down and thought about with this, is just the importance of drawing a circle around some of the areas that you like, and then drawing a smaller circle somewhere that's within walking distance of a half decent train station, really. So that's been a kind of an outsized thing for us to think about. But look, in terms of the actual things that the property offers, I mean, a backyard would be great. I think, with everyone, they start off with this big long checklist, which if you're ticking everything, you're living in a mansion in, Bronte or in Toorak or whatever, but you've got to whittle it right down, don't you? And all of a sudden you're having those hard discussions with yourself about how badly you really need, a walk-in wardrobe or a second bathroom, I guess.
Well, it's we call it the buyer's decision quadrant, and it's you got to talk about the C word, which is compromise. So it's either price, location, size of the land, quality of the dwelling, and generally speaking, for most people, price is fixed. Location is fixed-ish. So therefore, it just becomes the size of land, quality of dwelling. And I think we buy on emotion and justify on logic, and it's why we give. You get this a lot too. Why can't you nail this, Chris? You're in finances. Because we give better advice to others than we give to ourselves, largely because when we give it to others, there is very little emotion in it. It's all logic. When we're giving advice to ourselves, as you said, as you was going through that thought process, the emotions are kicking in over the logic and all those sorts of things, which makes it a very challenging decision. Hey, you mentioned John before. You just said he's 3. What do you think the conversations you will have with John over the dinner table about what you would like him to do, his career and with his finance, based on the family tree scenario you just described to us?
It's a good question. I mean, most of our conversations are about Thomas the Tank Engine at the
Yeah,
moment, so
Louis.
I'm looking forward to having some conversations with him about potentially one of his assignments at school and about how it's triggered some thoughts about something else. Look, the main thing that I would love to get across to him is just the idea that investing is a long game. I think with a lot of young people, it's this idea that we can get rich, quick, and to treat whatever market it may be a bit like a casino, which I guess I would be a little bit disappointed if I saw him making those snap decisions and those really fast and volatile moves. Some people do very well out of that, and good on them. But for me, investing is a get rich slow scheme. And so to just sort of build it and be thoughtful about your moves and potentially buy a lot more than you're selling, and just those savings, I guess. That's the kind of thing that I would really love to instill in him, is just that idea that this is grown up stuff. This is what you do with the money that you are able to earn and save. And then, wouldn't it be great if you get a dividend every 6 months from it, or if, it grows in value and you can kind of keep an eye on it like that. I mean, one of the best pieces of advice I got when I was starting to get into equities and shares is, buy it and then put it in the bottom drawer and don't even think about it for months. Just take it out and have a look and have a think, and then put it back away. Just get it out of your head as much as you can for a solid chunk of time. Dedicate a little bit of time to think about it, but then, and it's hard because we've all got the apps now, and it's so easy to kind of check in on your investments.
I can just picture this story here, Chris, where his granddad Alan's coming in. It's Christmas at 15, and he's got this big box. And so, John's really excited about what's in the box, and he opens it up and it's his dad's dozen books on property finance, money management, etc. And you just go, there you go. There's your lessons of money management and how to look after things. Just
fill your boots, enjoy. That's right. Yeah. Well, that's the other thing, is that I'll be able to hopefully hand pass Johnny off to Alan and say, okay, go have a chat with you.
Hey, Chris, you obviously have a lot of exposure. You've got a really wonderful sort of social media presence, and you're doing all great work on that. And there's a lot of fantastic gold that you're sharing. What are some of the most common questions that you're getting asked by your community in those environments in terms of where they need the most help?
Look, I think the level of interest has been really about how the relationship at the moment is going between regulators, the government, and major businesses. There's a lot of comments on that. I did a video in February about how competition works in Australia, about how many banks there are and how many airlines there are and how many telcos there are. And it raced away and got a lot of views. And the comments were thick with people wanting to know how this is managed and whether it's actively regulated, or why there aren't more supermarkets that are making a killing in the Australian market. Is 26, 27 million people in Australia enough to support a thriving set of industries like that? I guess along this journey, I've been really interested and impressed at how engaged these audiences are and how well educated they are. They don't need catching up on what's going on in the environment. They know, and they have opinions, and they want fines for corporate malfeasance to be higher, to make more of an impact. So I guess the thing that I'd be saying, to anybody that's sort of commenting on these videos is, I'm amazed at kind of how on the ball everybody is. It's been kind of amazing to see. And I guess I didn't expect, there's a dose of silliness in a lot of these videos, but the point of them is really to try to get a point across. And I've been amazed at how kind of ready to have the conversations people are on social media, which has been really nice.
And Chris, you get to see a lot of different types of economies operating. Some more free market, like maybe the US might be a good example, less regulation, more opportunity in that sense versus some more regulated markets. Are you forming a view in terms of what helps grow competition? Is it a regulatory arm, or is it sort of more free market where the opportunities, the margins are seen there, and obviously then other businesses come in to disrupt those healthy margins? What's your view in that space?
Yeah, look, I think it's got to be free market, or almost entirely free market, with some pretty close watchful eyes from regulators. I was really happy to see that there was some more juice flowing towards the ACCC. in some of the more recent budgetary updates from Treasury. Look, I'm lucky in this job. I get to sit in those Senate inquiries and listen and kind of hear what the questions coming from senators to people like the CEO of Woolworths or somebody who leads large businesses who are selling broccoli or leafy vegetables to the supermarkets about what's actually going on. There's definitely work that needs to be done in Australia to make sure that these markets are operating as best they can. To be honest, one of the more interesting things was the property element. The man in charge of Ritchie's IGAs, Fred Harrison, came into that and said, look, the part of the problem for us is the property portfolios of these supermarkets and the fact that we can't seem to get our foot in the door when it comes to large supermarkets, because developers and people who buy apartments, it's a selling point to be able to say, okay, we live on top of a Woolies or a Coles. And so they get preferential treatment potentially. These are some of the comments that came out. And so you just sort of think about, that I thought was a really interesting thing. I've kind of departed a bit from the point of the question, I'm sure, but it was kind of to that point of property is playing an important role in a lot of different parts of the economy at the moment too.
Hey, Chris, my final question for you is lighthearted, and it is around what Ben talked about before with your social media approach. It's highly entertaining. It's clearly popular, but what's your intention with that brand there? Because I don't know, if I scroll down to the bottom of your feed, the style of video that you have is, but then it wasn't. So I don't know if that was where there was a real spike in your followership. But how do you decide which one of those to tackle, and what inspired you to do that approach? And we'll put a link in the show notes so people can go and check it out. But tell us a little bit behind the scenes on what the intention of your brand is with your social media presence.
Yeah, it's an interesting question. I haven't actually put that much thought to it. I started doing social media videos like 10 or 12 years ago back at the Australian. It was just, pick 3 interesting business stories of the day and do it to camera, and we'll put it out on our Facebook, which was back when Facebook's a bit more of a thing than it is now. So it's kind of been something that I've been mucking around with really for quite a long time. And then about a year or 18 months ago, I started doing the same sort of thing with vertical video, just holding up some charts about stuff that I was finding interesting and talking a little bit about them. And I found they were getting a bit of traction on TikTok, which I'd never been on TikTok before. And okay, there you go. It turns out there's a lot of eyeballs there. And, one of the things about content, as you guys know, is you want to fish where the fish are. And if there are fish on TikTok, then okay, well, let's start giving them some stuff. And then from there, I kind of found that, if you add a dose of humor and a little bit of silliness in it, then that actually doesn't hurt you. So I've been trying to chip that in a little bit more and just to try to have a little bit of fun with it. But as for destination, I certainly don't have one in mind. It's just this idea that if I can do these sorts of videos and, if people are engaging with them, then that's great. I can work them into my week, my month. It's kind of a nice way to be. I have found is that it's kind of nice to get that two-way communication too, because I love TV, but it's throwing it out there. There's not a lot of communication coming back. Yeah.
Well, Chris, they're highly educational and highly entertaining. So I think, more people need to be checking them out, because what you are delivering is education, not so much just content for content's sake. So, if you haven't checked them out, they are really, really insightful. My final question for you, Chris, is just around the importance of advice in terms of financial planning advice. And, is it a thing? And if it is a thing, what are some of the things that, households, mum and dads should be thinking about when they're potentially seeking some financial advice from a professional?
Yeah, I think it's absolutely a thing. It's kind of hard to see how much it's kind of disappearing from the landscape over the last few years. That's been kind of hard, and I think come at a real cost. Look, I think people should be pretty wise to the kinds of fee structures and commission structures in the financial advice space. I think most people are. And I think as long as your financial advisor is upfront with you about how they are receiving those sorts of returns, then there's no worries, really. I think it's really important to have a trusted financial advisor. I think it's really important to check in with them regularly, whether it's to do with your mortgage or, consolidation of personal loans, whether things gotten away from you. And failing that, just getting in touch with the bank regularly. I mean, these are the sorts of things that we're told all the time. Just get in touch with the bank, see if they can do better on an interest rate that you're on. We talk about, I spend a lot of my time talking about interest rates from a Reserve Bank perspective, when in reality, a lot of people out there have the ability to get themselves an interest rate cut if they communicate with their mortgage broker or a bank. So, I really hope that people are doing that. I think they are. I think Australians are really smart when it comes to their money on the whole, but I would love to see financial advice make a bit of a comeback in Australia.
Beautiful.
Hey, Chris, it's been real fun catching up with you. It's you've got such a breadth and depth of knowledge and experiences and scenarios that you get exposed to, and I think that across all of the platforms, whether it's your social media, whether it's your hosting of the Today Show on the weekend, all the stuff that you do as a finance journalist, it's a real credit to you taking opportunity, leveraging on, I guess, wisdom that's been passed through to you, and sharing that for the community. So on behalf of everyone here at the Property Couch, mate, thanks for joining us today.
Bryce, Ben, it's been a pleasure.
Chris.
Thank you very much for having me. Appreciate it.
Thank you, mate. There you go, Ben. Someone who has had some conversations with, it's nice to be able to say your mentor was your dad, right? But then taking his opportunity and really run with it, and has had a really powerful impact on in his career professionally, and he's now a well-renowned source of information when it comes to all things sort of finance.
Yeah, what I like about what Chris is doing is he's getting some really great information from his dad. He's processing that, but he's also getting information from other areas, and he's also digesting all of that and coming up with some of his own positions in terms of what happens around businesses, finance, money markets, and also property. And you also saw there, that little bit of vulnerability about being in the property market himself right now, trying to find a property that ticks all those boxes, and the challenges we have with that in terms of how we emotionally connect. And as owner occupiers, we've talked about this before, when you are going into a property, you're trying to project yourself in that property in the memories that you're going to create. And if you're just not feeling it, and then ultimately that's not necessarily going to be a property. And if you think about those really good A-grade type properties, we talk about owner-occupier appeal, most other people are feeling that same feeling that Chris gets on some of those really good properties. And guess what? They go under real competition, and it pushes the prices higher for those types of properties. So just goes to show you, as humans, we're not perfect in this space, and we certainly still buy with emotion in a lot of respects when it comes to our owner-occupied home and how we make it a home rather than just a house.
And a timely reminder, Ben, that success is actually just getting in the arena. So just because he has a well-known name is not the prerequisite for him setting up his finance. He's investing himself. He's, to his words, his portfolio isn't anything as a standout yet. But the key word was yet, because he's actually doing it and investing and bringing it back into focus and passing that wisdom on to his kids and having those conversations with his wife. And the reason I say that, Ben, is because quite often people can go, "Oh, it's easy for him." He's going through the same emotions that we're going through. He's going through the same, decisions that we need to make. Do I get in the arena? How much do I do? Should I keep it there? When we're telling stories, we're all having the same human emotions and responses when we're about to step forward, Ben. Whether you've got a big name surname or whether you're someone who is just starting out and breaking your family tree and the money story that you're having, we all have the same emotions. I think that was a really nice, timely reminder.
He's just such a gentleman, and he's really relatable. And that's what I like about when, whether Chris is interviewing you or me for a show or whatever, or a news report. And he is trying to get to the core of the story. As a journalist, that's part of the essence of what they bring out, as part of that. So he's an absolute delight. And all of the stuff he's putting out on socials as well is really complimentary in terms of building that knowledge base and hopefully then, having enough knowledge and confidence to actually take action. So credit to Chris, and we just loved having him on.
Thanks again, Chris, for joining us on the show. Link in the show notes to go and check him out. Some of those videos are really insightful and funny. Hey, my life hack today, Ben, is around, I think I've told everyone in the team, I've been cooking my kids hot breakfast every morning. It feels like forever, but since about 2016, because of a gut healing diet that we went on with my son, it made a big difference. But Samuel, my youngest, the theory is that I've got to make sure that he's got plenty of food in his belly before he goes to school, Ben, because attention ain't his strong point when he gets into the classroom, right? So then I found this little life hack here. So on If you're watching this on YouTube, you'll be able to see the visuals. For those of you on audio, I've got to try and describe it. But what I've got, Ben, is I've got these small little pans that I put onto the hot plate. So just imagine a small little pan that if I crack 2 eggs, is just enough for the 2 eggs to fill the whole pan, right? So one of those small camping ones. And then I always put the lid on top. That's how I do it, and it worked out pretty well. Well, this little life hack is what they do is they put a little bit of water, Ben, when it gets, so you put the egg, crack it, starts to go. When it's probably a third to a half done, you then put a little bit of water in and then put the lid on, Ben. And what it does is it creates the steam. And the steam within that little environment helps cook the top end of the egg, because I've been trying to find little ways to speed that up, because my youngest doesn't like the runny bit. So what I have to do is at the end flip it over so it's sunny side down. Well, this way I can leave it sunny side up with a little bit of water, Ben. So it's just people go on this little life hack journey with me of all these little trips and ticks that I'm trying to do for my own family. But just a tiny little bit of water, put it in, create some steam, trap the steam in, Ben. That helps with the top of the egg. So the fried egg lovers are going to love that. For the rest of the folks, they're going to say, really? On a property and finance and money management show, you're talking about eggs? There you go.
As long as there's enough eggs around. I mean, obviously with virtual at the moment, we've got to hunt around for our eggs, but hopefully that'll be all right. 2
cartons each per store, Ben. So very good. What's making property? In fact, mate, as I throw to you, it's probably a fair big amount of what's making property news today.
Mate, it's a huge story, and I mentioned at the start of the show, and so I want to come back for this is exactly why everyone's hung around, because I do need more people to help us out in this particular space. There's a couple of big developing stories in the regulatory space. We're going to firstly turn our attentions to the New South Wales marketplace, and what we've seen here that New South Wales have put forward their legislation for the banning of no grounds evictions, okay? And so their bill has been put in place. Now, there's a couple of things that's really important as part of this. And inside the show description, we've got a link where you can learn more about the bill. And then effectively, they've got a form that I want people to complete. Okay, so it's a survey that they're asking for. And I think the context here is really important. We were fortunate enough to, wearing my PICA hat, I was fortunate enough to meet with the tenancy or rental commissioner of New South Wales. It's a recent role, sort of been around now for just over 12 months or so. We had some nice dialogues and some sensible exchange, but there was certainly something that caught my attention in what she said around her claim was every 18 minutes, somebody is being evicted in New South Wales on the no grounds eviction policy. And I thought, wow, that is interesting. And she said, so, the question that then I asked was, well, why are they being evicted? Because the way in which the legislation works is I don't need to give a reason. And so if I don't give a reason, then, they don't know why the case is. And so what they're trying to do now with their no grounds eviction is to sort of say, well, we're only going to give you 2 reasons. The first reason is if you renovate the property, and it's extensive renovations, which means the tenant no longer can live in that property safely. And the second one is if you move in or a close relative to you moves into that property. So what that obviously doesn't disclose is really a lot of the reasons why tenants may be evicted from their property. And so what I'm asking everyone to do, because no one has any data on this, right? So they're going from one extreme to the other. They're thinking, well, it's just, this power imbalance is so in favor of the owner. We want to basically even that up. Well, they're not evening it up. What they're doing is basically making it near impossible for any reasonable grounds for eviction. And so we've also created a survey that I do want people to complete for this New South Wales submission. So they've asked PICA to provide a submission. And again, I was saying before, there's also a survey that the general public can obviously do. So what I'm asking for is I've got a very short survey to say what would be a reasonable, reason why you would evict a tenant from a property. And there's a checklist there, and you can pick whichever ones you would think is a reasonable reason why. So we want to start collecting data. So rather than, regulating to the lowest common denominator, we want to basically fill that survey in so we can present that data as part of our submission. Only problem is that submission is due on the 21st of June or the 20th of June. So they haven't given us a lot of time. So you need to act on completing that PICA survey straight away. So that's in the show description. And you also have the public government survey that they want you to also complete as well. Those two things are going to add weight to our argument in New South Wales in terms of getting the balance right between no grounds. So we're happy to move off no grounds, but we want to set up some criteria around what are reasonable grounds for eviction. And you can see on that list, we've created at least about 15 or so reasons why. And so you just get to choose which one of those. So that's an important action point that I really am asking a special favour of our community. If you owned a property in New South Wales or previously or currently own a property, please complete that survey as quick as possible. Then I'm now going to turn our attentions, Bryce, to the Victorian marketplace. Now, we saw some very frightening data released, and we've been talking about this, and I was on 7 News on the weekend for this particular story. So the bond rental yield data was released for the March quarter, and it was worse than we expected. So just to give you some context, in the quarter between December and March, the Victorian market has lost 10,404 properties from the rental market. Now, if you then think about that over the 12-month calendar period from March to March, we've now lost 15,607 properties for rent in Victoria. Now, that in itself should be alarm bells ringing because obviously it's going to mean tighter rental vacancies, which will mean higher rents for tenants as these small business private rental accommodation providers start to recover some of their costs. You know, this is where, again, they're tone deaf, Bryce. We saw last week that they've released a notification about further changes to minimum standards. And so now they're going to come back to the property owner to increase their property to a minimum standard to meet 2045 energy efficiency or net zero emissions from these properties. So the timing couldn't be worse in terms of some of these reforms that they're trying to bring in. So insulation in the roof, making it more difficult for gas to be used in properties. We're talking also about minimising on drafts, in doorways. And so just lots of little incremental things that add up, heating and cooling, solutions for the home. So, there's some things in there that are pretty easy to fix and have a safety element to them. But the other stuff about energy efficiency, it just couldn't be worse timing for the Victorian market. If they want rents to continue to go higher, then introduce this policy and it'll just make things worse. So there is, again, links in the show notes, Victorian property owners to complete the survey. So there is a survey and there's also a means by which you can also complete a public submission. Okay, so no public submission in the New South Wales inquiry, but there is a public submission here as well. So go to the show notes. We've got the links to the main pages. You can learn more about that and then put your thoughts forward because these two markets are critical markets. This is about the tens of billions of dollars of supply of rental accommodation that both Victoria and New South Wales are going to desperately need. And so we just want to make sure that we get the policy reform balanced and right because there are good reasons why people are told why they have been evicted. But because we don't have to disclose that, we don't. But if they introduce it to sort of say, well, what are the reasons? Give us more flexibility in those regions, and I reckon we'll get the balance right over time, Bryce.
So there you go, folks. It's when we're preaching that action is the number one secret for success. We're actually asking for action for this particular movement, so that something can actually be done about it. So if you're thinking, oh, someone else will get to that, no, please. Can you get to that? That'll be super helpful for all the advocacy work that Ben is doing on behalf of all property investors in consultation with a lot of the other leaders in other, for example, and other organisations who are all looking to work towards the same aim here, folks. So in the show notes, click on the links, help out this process and see what Ben and all of the team can do with that. But big show, Ben.
Huge show.
Lots covered there, folks, and hopefully you can be a part of that. And just to reminder, Ben, to all of the listeners who are our clients, you and I are not selling our Victorian properties. Just
no, we
for
are
the
not.
avoidance of doubt, we're playing the long game on the Victorian properties, but we do understand that in the short term there are a few little headwinds that people are navigating. But mate, again, super awesome show, episode 498, in the shadows of 500, Ben. But mate, until next week,
knowledge is empowering, Bryce, but only if you act on it.
See you next week, folks.